So the next type of moving average that I want to introduce to you is the exponential moving average, or some people call it the EMA. Okay, so many different traders use different numbers, but personally for me, I use the 5 EMA. Okay, the 5 exponential moving average. So you go through the same sequence as compared to just now when you insert your SMA. Okay, so I wouldn't go through that, but the things that I need to key in are different. Okay, the period you need to set it as 5, then the shift you keep it as 0, and main method you put it to exponential, okay, instead of simple. Apply to close, then for the style choose any color you want, then for the thickness choose any thickness you want. Okay, so press OK, then you would get this line over here. You see this blue line right here? This is my 5 exponential moving average. So of course different people use 5 EMA for different purposes, but personally for me, I use it to determine the position of the candlestick. Okay, to determine the position of the candlestick. Now what do I mean by that? Because when we look at a candlestick's position, on the surface it might look like it is at that place, okay? But in real fact it's actually someplace else. Okay, I'm going to show you what I mean right here. Okay, let me give you an example. Pound dollar. You see this blue line over here is my 5 EMA. So let's take a look at these two candles. Okay, these two candles. So visually on the chart, you will see that these two candles, it is above 100 SMA. Okay, this black line is my 100 SMA. Visually, okay, it is above 100 SMA. But if you look at where the 5 EMA is for this candle, if you draw a vertical line downwards, okay, the position is right here. You draw a vertical line, okay, on your platform you can draw a vertical line, and it converges right here. So this conversion point tells you where this candlestick really is. Okay, so in this case, for this candlestick, okay, for this candlestick, the position of its 5 EMA is below 100 SMA. Okay, and same thing for this candle, this red candle right here. If you draw a vertical line downwards using your MT4 platform, you'll see that it also converges below 100 SMA, which means that although visually these two candlesticks are above 100 SMA, yes, but then in real fact, it is actually still below 100 SMA. And this is how the 5 EMA helps you. It helps you determine the real position of the candlestick. So of course, all of these candles here are very simple, okay? Because the 5 EMA is all below 100 SMA, then it's obvious that the candlesticks are below 100 SMA. The tricky ones are only these two. Okay, so let me show you another one. This red candlestick right here, visually it is below 100 SMA, right? But in real fact, it is actually above 100 SMA. You see where the 5 EMA is? It tells you that, hey, this candlestick is above 100 SMA. So obviously you know that this candlestick, this green one, is still above 100 SMA. Then only when it comes to this candle, then it is below 100 SMA. Okay, so this helps you determine whether you are trading along the trend or against the trend when there is a trading signal in any of these 5 candles. You will know exactly, oh, is this candle below the trend or above the trend? Okay, give you another example. This candlestick right here, even though a huge part of the body cuts below 100 SMA. Okay, this black line here is my 100 SMA. But again, we look at 5 EMA. Okay, it is actually still above 100 SMA. Same thing for this green candle right here. Even though the whole entire candle is below 100 SMA, by real fact, because where 5 EMA is, the candlestick is still above 100 SMA. Alright, so by now you already get the whole entire point. We just look at 5 EMA. Okay, so the other function of the 5 EMA is that we use it as a confirmation indicator. What do I mean by that? Later on, I'm going to elaborate more on this when we go to the breakout strategy. But I'm just going to go briefly on what does it mean by confirmation. Okay, it's almost the same principle as compared to function number 1. Let's say I give you this whole entire chart, pound dollar right here. Okay, and I draw a support line for previous day. Okay, this one here, this yellow line here is my support line. Okay, and remember support line we draw previous day lower, which is this point. Okay, for H1. So how do I determine which candle is confirmed to have broken the support line? Again, we look at 5 EMA. So based on what we learned just now, I can surely confirm that these candles right here has broken support line. Because of why? We look at 5 EMA. This candle, the 5 EMA is here. You draw a vertical line. Okay, if you can't really see, draw a vertical line. Then it converges over here. Obviously, it is below the support line. Yes, broken support line. Whereas for this candle right here, this candle, okay, this small red candle right here, even though visually it has broken support line, the whole entire candle. But if we look at where its 5 EMA is, it is still above the support line. So meaning that we only can confirm that all of these candles has broken support line, but not this one. Okay, same thing for resistance. Okay, we draw previous day high on an uptrend. Again, in order for us to confirm whether the price has broken resistance line, we look at the 5 EMA. So obviously, this candlestick right here has not broken resistance line. And this candlestick right here also has not broken resistance line because of where 5 EMA is. Alright, a lot of people see this as having broken resistance line, but in real fact it actually hasn't. So again, we look at 5 EMA. Of course, these candlesticks right here all have confirmed to broke past resistance line. So of course, we look at 5 EMA again, and we can confirm that all of these candles right here has broken resistance line because of where 5 EMA is. So the third function of the 5 EMA is that it helps us to prevent trading into small reversals. So what do I mean by that? Okay, one very interesting principle about 5 EMA is that you realize that the price tends to stick very closely to 5 EMA. As compared to 100 SMA, 20 SMA, it doesn't really stick to it as much, but 5 EMA is constantly very close to the price. Okay, so what does this mean? So see 5 EMA as a magnet for the candlesticks. Okay, to put it simply. So what does this mean for you? If you look at this candlestick, for example, you see that the whole entire candle got detached from the 5 EMA. Okay, it's not touching 5 EMA at all. Eventually, this candlestick has to go back down and stick back to 5 EMA to follow 5 EMA. Let me show you another example. Right here, this whole entire candlestick is detached from 5 EMA, and then eventually there's a bearish candle and then come back down to attach back to 5 EMA. Do you see that? Another example. Okay, detach again, has to come back down to attach back to 5 EMA. Another example. Detach from the bottom, has to come back up to stick back to 5 EMA. So realize that every time it gets detached, it has to go back to 5 EMA. Then a lot of people ask, Karen, is it okay if I make a sell at this candle? Because I know that it's going to come back down. Later on, I'm going to answer this doubt that you have. Okay, but for now, I'll show you another example. Okay, still same currency pair, pound dollar. You realize that over here, the price again detached from 5 EMA. And then of course, eventually, it has to come back down to attach back to 5 EMA. So here's the thing. We don't trade breakout in this situation. Because why? Number one, it is detached from 5 EMA. I would want it to retrace back to 5 EMA before I consider whether I should go in. Okay, but the most important reason is because remember the criteria. On an uptrend, you don't want the 20 SMA to be below the candlestick, because look at where 20 SMA is. My 20 SMA is this white line, remember, and this is the start of the day, the period separator. And you realize that for this whole entire section right here, it hasn't touched 20 SMA for the day. So by now you already know that the price eventually, you see, has to come back down to touch 20 SMA right here. Okay, so this gives me a lot of reasons on why I shouldn't trade a breakout over here. Just because it broke resistance line doesn't mean I need to go in, because there are a couple of retracement that might just happen, and in this case it did. Okay, and to answer your question on whether is it okay if we make a sell right here, if the candle detaches from 5 EMA, you see this one detaches again, then there's a small bearish candle to stick back to 5 EMA. Is it okay if you sell at this candle because you know that it's going to retrace back to 5 EMA? The answer to that is no, you shouldn't sell right here, because number one, you are again trading against the trend. You are selling in the bullish market. Okay, that's one very important rule that we should not break. Never ever trade against the trend. Never try to pick highs and pick bottoms. Unless you are a super experienced trader, then by all means go into that, because some traders are very successful at picking tops and bottoms. But if you're a beginner, I don't recommend going to that. The second reason is because sometimes instead of the price going down and follow 5 EMA, sometimes the 5 EMA would follow the price instead. So if you were to short sell at this detached candle over here, you would have get killed by this bullish move right here. Do you see that? Because instead of the 5 EMA coming down and follow 5 EMA, right now the 5 EMA follows the candlestick. Do you see that? So never ever make a short sell over here unless there is a trade signal. Okay, unless there's a trade signal. Same thing, another example over here. Can you short sell over here? Now if you're the short sell, you probably would have gotten a couple of pips. That's not very significant. But then you see where the price went. It went all the way up. Okay? Never ever trade against the trend. Never ever try to break your trading plan, because it's just going to get you stopped out. So if I'm to open a euro dollar chart, give you an example, okay? So if you look at this portion right here, it's pretty volatile. If you look at this particular candlestick, okay, this red one right here, although it looks like it is above 100 SMA, but in real fact, it is actually still below the 100 SMA trend. And again, you realize that every time the candlestick detaches from 5 EMA, it has to come back down. This one is a lot more obvious, okay? This one got detached, this one got detached, and it has to come back down and attach back to 5 EMA. Okay, even as I scroll, you see that the price tends to stick to 5 EMA most of the time. It only gets detached once in a while, but most of the time, you see, they tend to stick to 5 EMA a lot.